Hello, everyone. Welcome to yet another weekly analysis. For this week, we're going to be talking about, the direction of the market, overall direction of the market, and then, finding out what pairs we could, trade for this week, and then the other week, right? So first things first, you have to be able to decipher or get a direction. This is the first thing, not plotting lines, not drawing counter trend lines. The first thing you have to look for as a trader is the direction of the market. And I mean the direction, I mean the overall direction. Now, we all know top down analysis that the monthly time frame is the overall direction of the market. We know this, right? The monthly time frame tells us the overall direction of the market. Then we come to the weekly and the daily time frame to then trade in that direction, right? So on the DXY, or rather the dollar tells us the overall direction of every other pair. Every other pair that is paired up with the dollar, it tells us the direction, right? So it is a no-brainer that for the dollar, you need to go to the DXY. If you're trading USD JPY, GBP USD, Euro USD, you need to go to the DXY to know where it's headed, to know, because funny enough, if you backtested the dollar enough, you will find out that, the dollar actually tells you things beforehand, right? The dollar actually, shows you what's going to happen before the other pairs even start, moving in the direction that the dollar wants to move. So the reason why I'm saying this is because we've been having, issues with direction. We've been having, or rather, people have been having issues with direction. Today we are buying, tomorrow we are selling. You need a final direction, one direction. Put that in your pocket and trade in that direction. Now we all know that market structure tells us that until we break this last low, we are bullish. Now I take that and I put it in my pocket, right? Since the monthly time frame is telling us that we are bullish overall, I come to the weekly time frame to and trade in that direction. They try and look for buys, but the weekly time frame right now is giving us a reversal pattern. It is important to understand this, right? Reversal patterns are like so. Double tops. You need to pick up the candlestick Bible. It tells you a lot. Double tops. When you see this in the charts, 9 times out of 10, the markets are about to reverse. I'm telling you again, when you see this in the chart, 9 times out of 10, the markets are about to reverse. Now, when you see this on a higher time frame, like the weekly time frame or the monthly time frame, 10 times out of 10, it is going to reverse. Not 9 again, now it's 10. Because the higher the time frame, the stronger the signal. And we're having that right here, or rather, we've had it. And I remember last week saying that, we would not be looking to get involved with the Euro USD and the dollar right now because this could be a potential reversal. And we're having that right here. We're having what a potential reversal. Now we know that the monthly time frame is quite bullish, right? On the dollar rather, and the weekly time frame is was bullish before, but now it's bearish. You have to be malleable. You have to be open, to changes. If you keep saying, "Oh no, I'm going to keep buying, I'm going to keep buying," you're going to keep losing money, right? So on the daily time frame, we have to see what's happening. Is it possible that the weekly time frame is just having, a little, reversal, a pullback, and but the daily time frame is still bullish? Because these scenarios happen, so you have to spend time in the market to understand these scenarios, right? But no, the daily time frame is also showing us a double top. We've already broken structure. We've already got broken structure, and we've created a lower high and we've created a lower low. These are signs of a bearish market. Lower lows and lower highs are signs of a bearish market. You see what I'm saying to you? So lower low like so, lower high and a lower low. These are signs of a bearish market. Now we know that okay, the dollar is no longer bullish. Now it's bearish. Now it's not favorable to trade the dollar anymore. So I remember last week, giving us a direction for the USD JPY. Now, the USD JPY is very bullish on the monthly time frame. Now, this is one thing you have to understand. The USD JPY is bullish on the monthly time frame, meaning we could look for buys, right? The weekly time frame was also very bullish, right? Meaning we could also look for buys. The daily time frame was very, very much bullish, meaning we could also look for buys. But then when the Fed rate came out, when the news came out, I was still in this trade. I was holding this trade all the way from 154,500, like so, right? I executed the USD JPY, on a Monday morning at 7, I think, or 9. I executed right here, and then I was close to my take profit, which was right here, and I should have gotten out, but I wanted to hold it to my take profit. And then the moment I saw that the dollar was, moving bearish on the daily time frame, the dollar was, breaking structure. It was, maintaining that reversal signal we had, from last week's video. I exited. Now, this is something you have to also understand as a trader. It is not enough. Listen, executing is just one thing. You see what I'm saying to you? Executing, plotting your lines, pressing the buy or sell button is one thing. The major thing with trading is managing your trade. You have to learn to manage your trades. Yes, you have to watch your trades. I'm not saying you should, follow, just, stick your eyes to the screen. I'm saying follow your trades, meaning have contingency plans. When this happens, I do this. When that happens, I do that. That's what I'm talking about. And I mean, journal them, write them down, have a box, stick them. Right? These are ways you grow. I'm telling you, because I can see that way. I can see in my own trading as well. Now, I am able to not take unnecessary losses because, I saw the dollar was moving bearish, was maintaining the bearish structure, or rather the bearish signal, and then I exited immediately. I took out 2% in one account, I took out 1% in the other. I exited what immediately. Now, the more reason why the dollar, the USD JPY is quite skeptical for me is this, right? If you look at the past, right, if you look over here, right, you will see that we had rejected from 157.500 before. You see what I'm saying to you? And this is not just any area of interest. This area of interest right here, this place right here was also detrimental in the monthly time frame. You see what I'm saying to you? This place right here was also what, it was something else on the monthly time frame, right? So you have to always go higher. Go to the higher time frame. If the daily time frame is not looking good, go to the weekly. If the weekly time frame isn't looking good, go to the monthly time frame. I don't know. People are scared of the monthly time frame. They think if they go to the monthly time frame and get an overall view, or look for trends in the monthly time frame, they will not make money fast. Trading is not about making money fast. Trading is about not losing money at all. That's what it's about. And when you're not losing money but you're executing, you are definitely going to make money, right? So these are the things about trading, right? So the USD JPY, right? I was skeptical at first when I was looking to execute, because first off, we came to this area, or rather this price 157,500, and we had a meltdown to the downside. Now we are back there again, and we could possibly have a meltdown to the downside, but I decided to follow the trend. I decided to hold the trend accountable for my buys, but the dollar then showed me that, listen, I'm going to maintain my structure. I am going to maintain my reversal pattern. You better not be there when I fall. That was when I exited. So I not only had the dollar in play, I also had an area, a turning point in play right here. Meaning the first time we came here, we fell. So 9 times out of 10, if we come back here again, we are going to fall all the way to the downside. So I got out, and I, took a little bit of, a percentage, and I took 2% in the other one, and I'm good. You see what I'm saying to you now? My original plan for UHJPY was to wait for a break of this level right here, so I know that we are not, going to be involved in any, manipulation. My initial plan was to wait for a break and a retest on the 4-hour time frame, daily time frame, and then buy all the way to the upside. This was my initial plan, but I thought to myself, I need to keep on buying until I see a reversal pattern, because I didn't see any reversal pattern from me on the daily time frame, neither did I see on the 4-hour time frame, right? So these little things gave me confidence to keep on buying, and I did buy. But then the DXY, the dollar, listen, the dollar is the superpower of the world, the currency superpower of the world, right? The reason why the dollar cannot just go out of style is because, when international transactions are being made, the SWIFT, that goes to the central, that goes to the states. That's what I'm saying to you. So if the dollar is saying I'm going to be bearish, trust me, you should be bearish. This is trading, right? These are the things we came and we saw, and we are using them because our mentors have used them to be successful. I'm not telling you anything new. Everything I'm saying to you was said to me. That's what I'm saying to you. So now you may be asking, Kevin, what's next? What are we doing for this week? What's next? I have something for you. I have something for you. GBPUSD. Yes, GBPUSD. Now it's simple and it's clear. The dollar index, the DXY, right, is the Euro USD turned upside down, meaning whenever we are buying, or rather, whenever the DXY is going up, the Euro USD is going to melt. Whenever the dollar index is going down, the GBP USD is supposed to what, go up. So I'm saying to you now, this is what I'm trying to say, right? The GBPUSD is bullish, meaning on the monthly time frame is bullish because we broke this structure right here, right? On the monthly time frame is bullish because we broke this structure what right here, right here, in case you cannot find it, right here. We broke this structure right here on the monthly time frame, right? That made us bullish. Now, for us to be bearish on GBP we have to come and break this structure right here. And I do not see it happening. What I see is the fact that we've broken this structure right here and we are what? Highly bullish. Now I take that and I put that in my pocket. I know this and I put that in my what? In my pocket, and I go to the weekly time frame. Excuse me, let me take this off. And I go to the weekly time frame to trade in that direction to look for buys. What's happening? This thing is making a mess. All right, so I go to the weekly time frame to look for buys in that direction. That's what I'm saying to you. Now, excuse me because I've been back testing, so these lines are quite disturbing. So let me take them off. All right, so the GBPUSD is bullish. For me, I need to buy. For me, that is an A plus setup when I'm trading in the direction of the monthly time frame. That is an A plus setup for me, right? Because in that manner, the weekly will also be trending in that direction. The daily will also be trending in that direction. Now, I said this before about the dollar index, right? When you see a double bottom like so, it is what a shift of structure or also a reversal pattern. This is a reversal pattern. You have to go and read the candlestick Bible or baby pips, look for reversal patterns and master them. Train your eyes. You have to train your eyes, right? So see a double top right here, equal highs, right? Equal highs are also double tops, right? You see equal highs right here, and then boom, we were bearish, right? But I was not interested in selling because the monthly time frame was bullish. So that's the B plus setup for me. The monthly time frame was bearish, so I was not interested in selling. So I sold the Euro USD and I sold it for like 2 months, and I didn't take a loss. It's been 3 months and I haven't taken a loss, and I've been trading for every month. But I'm able to reduce my my exposure into the market, right? From October, from October, November, December, I've taken about what four trades, I think, 4 5 trades, and I haven't taken a loss. Not because I'm the best, I think I'm the best, but I see myself as the best, but because I am able to reduce my exposure into the market. I execute less, which reduces my risk in the market, and then also increasing my profit because I cherry pick my trades. Now, for GBPUSD, right? All we have to do is this. Now, this is what I feel is going to happen in GBPUSD because it's quite tricky still. Yes, I'm telling you this right now. It is quite tricky still. So for GBPUSD, we've tested this area here, this price right here, because these lines, I like it when we have to break and retest these new lines. It is important for me, right? I don't know, you may do yours differently, but whenever we break into a new zone like so, we have to break and retest it on the daily time frame. Now then, I start looking for buys from the minor level. So GBPUSD, I need a confirmation. Now the weekly time frame is bullish because we've had a reversal pattern, right? Daily time frame is bearish. That's what you have to understand right now. The daily time frame on GBPUSD is bearish. Why? Lower lows. Let me draw that. So lower lows, lower highs. You know, lower lows, lower highs. Exclude the lagging. Lower highs and then a lower low, right? But we never came in to put in a lower low like so. So for us to market structure says for us to be bullish, we have to come and break this lower high right here. That is how we become bullish. There is no double bottom here because these lows are not equal lows, right? So for us to be bullish, we have to break this level right here. I am a market structure trader. Market structure before any tool, any counter trend line, anything. Market structure first, and that's how the market moves. You know what I'm saying? Price action, all of that. Now, for me to be bullish, I have to come and break the structure. But I am anticipating that the daily time frame will, come into play with the monthly and the weekly time frame. So what do? I go to the 4 hour time frame. I go to the lower time frame, the 1 hour time frame to look for an entry. You see what I'm saying to you? I go and I look for ways to execute in the market, and I like how we are maintaining structure: higher high, higher low, higher high. We came back into the demand level and we are maintaining it. We haven't closed below it. Yes, we haven't closed below it, but the 1 hour time frame has very much closed below its demand level. Now, for us to execute GBPUSD, right, I need to see a break of counter trend line and a break of structure, meaning we have to break this structure right here, we have to break this last structure right here, right? And then also, break the counter trend line. That is how I will be executing my trade. But I feel, what I feel doesn't matter in the market, but I'm expecting a double bottom. You know what I'm saying? So for the UPSD on 1 hour time frame, I would be glad if we put in a double bottom like so, and then a break of the neckline and a break of counter trend line, and then we make bank. You know what I'm saying to you? We execute and then we make money, and that's it. This is what I'm expecting. Now, if anything else happens, right, other than a break of structure and a break of counter trend line, I am not involved in the market. If the markets decide to open on Monday, on Sunday night, and then do this, I am no longer interested in this trade. That's what I'm saying to you. And then I fold my hands and I wait for the market to unfold and tell me what it wants to do. But for now, I have a plan, I have a direction, and I have a mode of execution, and I'm going to do so. Fear will creep in. I understand. Fear will come and tell you, you shouldn't do that. You shouldn't execute. You might take a loss. Listen, I'd rather execute and take a loss and learn from it and suffer the pain of that loss than not execute because I want to play it safe and then suffer the pain of regret. Trust me, you don't want to suffer the pain of regret in this market. You would rather suffer the pain of a loss. I'm telling you this. A loss is good because you can learn from it. You cannot learn from regrets. You cannot learn from missing trades. In trading, you become an expert. You master the skill by executing. You master the skill by pressing that buy and sell button. It doesn't matter where you do it, demo or a live account. As long as you're pressing that buy and sell button, trust me, you're gonna become a better trader in time. So this is all for this week. There's nothing special. This is all for this week. Come on here and we tell you, and I tell you, buy, break of structure, sell, break of structure. Simple. There's nothing special. There is no new tool. There is no quant analysis. There is no indicator. Nothing. Simple trend, simple market structure, price action, and that's it. And with a little touch of Jesus Christ, that's what I'm saying to you. A little touch of the Lord. You pray before you get on the market. Trust me. So have a great weekend. Learn back test, plan your trades, journal your trades, and may the Lord help us become better traders in Jesus' name. Amen. Bye bye.